You're listening to Prime Time on Money FM 89.3. I'm Rachel Kelly. Now, it's been a busy start to the year 2022 for the Singapore Exchange. We did see the introduction of the first special purpose acquisition companies, or SPACs, here listed in Singapore. That said, though, the bourse operator recently announced its first half 2022 financial results with an 8.8% decline in net profit for the first half of the financial year. Now, to help us take a deeper dive into those numbers and understand its strategy for the year ahead, we're joined now by Ng Yao Loong, who is the Chief Financial Officer at SGX. Mr. Ong, thank you so much for taking the time to speak with us today.
Pleasure, Rachel. Glad to be here.
Great to have you with us. So let's start off and take a look at these numbers. We've got SGX reporting first half 2022 adjusted net profit of 221 million. That's down around 9% on year. Perhaps you can tell us the main factors that contributed to that decline, although it's only around 9%.
Yeah, so on a headline basis, earnings declined 9%. There were certain one-off gains which are not operating revenue, or they are not recurring. And so if we strip those items off, and we had a couple of those items, one in a year ago and one this year, actually the decline was a lot lower at 3%. But that said, it is a decline, and maybe I'll just give an overview of what contributed to that decline. On the revenue basis, it was actually flat. But once we strip out the treasury income, which is what we earn on a collateral on the margins that customers place with us on the trades, actually revenue went up by 6%. Expenses, which I'll say relatively under control, also went up by 6%. And so you will see that when we look at what contributed to the earnings decline, really came from the decline in treasury income, which was over $20 million. And that actually explained a large part to why we had that 3% decline in earnings on an adjusted basis.
That said, though, as you mentioned, SGX's underlying core business rose 6%. You've got higher trading and clearing revenues from equity, currency, commodity derivatives. You also had subsidiaries, BidFX and Scientific Beta, achieving collectively, I think it's about a 20% increase in revenues. Where do you see the main drivers of growth in the year ahead?
Yep. So I think the earnings growth and the revenue growth this time around actually reflect what we have invested in the business. And I suspect going ahead, this is where growth is going to come from. FICC, our fixed income, currencies and commodities business, have had a good half, 15% year-on-year growth, pretty broad-based growth, not just in any particular segment, but across the currencies and commodities. So what do I mean? When I look at currencies, clearly, this is our FX business. The exchange traded business went up by 6%. And when we look at the OTC FX and the exchange traded FX, the average daily volume, which I think people can equate this to our capital markets or securities market trading value, it rose by more than 40% to about 57 billion. So that gives you an idea of how much FX has grown. Commodities as well. Our iron ore volume went up by 17%, freight more than 90%. So that gave a strong uptick to the revenue performance of FICC. So I'm pretty pleased with that segment. And when we look at equities, which is both our cash equities and our equity derivatives business, a bit of a more mixed performance. On the equity derivative side, this is where we have our very core products which allow customers to access Asian equity exposure. For example, our India Nifty product, our Chinese A50 product. So that also grew and contributed nicely to the overall revenue growth of the group. Volumes were down, contributed by certain contracts that had a little bit of a muted activity. But our major contracts exhibited good, healthy use. Customers continue to use our platforms. And so we see revenue contribution coming from equity derivatives as well. Those are highlights, I guess. In terms of the cash equities market, that was a decline, about 7% on the daily trading value. But that said, it came from a quiet month in December. I think we are seeing a little bit of uptick of activity in January. And then just now, as you said, with some of the new listings, including SPACs coming up, we hope to see a little bit more activity in the cash equities market going forward.
And let's talk about that, because I know for the first half of 2022, you had six IPOs, 6 new equity listings on the SGX for that period. Now, starting the beginning of this year, I know that financial year ended at the end of December. January, we've already got the first 3 SPACs listed here in Singapore. What kind of pipeline are we looking at for IPOs on the SGX, whether or not it's a SPAC or a more traditional IPO?
We're seeing clear interest from a bunch of issuers that I think has seen what a platform has been able to deliver. So I think you rightly pointed out, we had about 6 IPOs in the first half, and actually the amount that they raised in this first half exceeded the total amount raised in FY21. So I think that's good momentum. And actually one of the REIT listings that we did end of last year was one of the largest globally by funds raised. Second, with the launch and successful listing of 3 SPACs in a month, raising more than $500 million in total, I think gave a good signal to the market, and these were by high quality sponsors. So listings are important, but what's also important for SPACs is the subsequent, what we call the de-SPAC activity, i.e. the business combinations, and I think that will provide investors with a choice of high growth and new tech companies that they can invest in. Still early days, I would say, but I think over time with the support of market participants, and of course, investor education, we think that will provide a vibrant alternative to the traditional IPO route. So if I can sum it up, good start, growing momentum, and clear interest.
And as you mentioned, these first 3 SPACs are tech focused, and we've seen quite a bit of volatility in the tech space. Are you at all concerned that investor interest may wane when it comes to SPACs?
I think volatility is part and parcel of the market. I think what is important, I think when we look at Southeast Asia, I think there's been lots of commentaries, lots of reports about the growth. I know we talk about the middle income growth of Southeast Asia. We talk about the digitalization of the economies of Southeast Asia and the level of fintech investments. I think those numbers are out there. And I think it's a matter of time that these companies will have to seek some form of monetization event to either raise public capital or to do other things that will fund their growth. So I think what SGX has done is to provide that additional avenue on top of the very vibrant VC or private equity ecosystem in Singapore that can provide companies, issuers like them, to be able to tap capital and meet their funding needs. So I think that to us is an important thing. I think the second thing that I wanted to highlight was there was a bunch of measures announced end of last year, where it was a collaboration between the government and the private sector. So again, we had the IPO funds, which I think is called the Anchor Fund at 65, run by Temasek, that will invest in promising companies looking to invest on SGX. EDBI, or that's the investment arm of EDB, also has a fund to invest in growth stage companies and grooming them for IPOs in Singapore. And then MAS also has a scheme to reduce the listing cost for companies and to promote the ecosystem research. So all those things together with the SPACs, with the streamlined secondary listing platforms, are important components to try and enhance the vibrancy of our cash equities market.
And you've spoken about potential new listings here in Singapore, SPACs, and you just mentioned secondary listings there as well. And I know that this was mentioned during the results briefing on Friday. Where do you see the majority of these dual listings coming from? I think CEO Boon Chye had said that SGX can be a very viable pillar for companies seeking a dual listing in the ASEAN time zone. Do you see a particular flow coming in from, say, perhaps China, the Middle East? What are you looking at?
I think, can't comment specifically. I think you have read certain things in the news report. But I think companies that choose to adopt secondary listings or choose to raise funds in this part of the world would probably have a strong nexus to Southeast Asia. They have made some investments. They have a brand name that are known to Southeast Asian customers. So I say these are the companies that would likely seek a listing because their names are well known, and I think the investors, including the retail investors in this part of the world, including Singapore, would then have a chance to be able to participate and invest in a company which which they may like and use in their daily living.
That's right. You're completely correct. I was hinting at the Saudi Aramco news. Suppose you've got any updates for us on that?
I can't comment on specific companies, but I think what we have done is the infrastructure. And I think what is good about SGX is that the outlook and the composition of the companies that are listed have an international orientation. So 40% are foreign issuers, and even many of the domestic companies or the Singapore companies that we are well aware of have large international operations. So that talks about an international flavor that SGX brings to the market.
And that said, China remains hot on the radar for many investors. Can you share with us perhaps some of the products that SGX is looking to roll out to tap into that?
We already have a very strong suite of what we call the China access products, because when investors look at China, they look at how they can gain exposure, and some of them may want to do it differently. So for example, in the equity index derivatives franchise, we've got our A50, very hyper liquid, and notwithstanding the various competition, it still trades very well. We see the interest from investors growing very strong. We have iron ore, which is a proxy to steel production. And I think it correlates very well with some of the China's economic measures like PMI. So again, that's one way to gain exposure to China. We do also have a fixed income ETF based off the China government bonds. Again, that is probably a largely underrepresented asset class in many of the international investors' bond portfolio. We see more inflows into that, and that's ETFs provides an efficient access for many of the investors that may not have the opportunity to participate directly onshore. So these are the variety of access investments or risk management solutions that we provide. And typically what we see are investors that trade in one product, do not just trade in one, they trade in multiple products. And I think that shows what we call the multi-asset platform strategy for SGX working. It is not about a single product, it is providing a network of products and providing a network of clients that come and provide their liquidity.
And another key investment theme that we've seen continue to gain traction is ESG and sustainability. And I know that this is a key focus for the exchange. You've got Climate Impact X, you've also got the Green Node, the Green Bond Data Platform as well. Can you talk us through some of the key initiatives and why sustainability is so crucial for the exchange, and what your area of focus will be on this front in the year ahead?
Yeah, I think this is something that my CEO, Mr. Loh Boon Chye, has talked about in many of his public addresses and media interviews. I think fundamentally as an exchange, we sit at what we call the heart of the financial ecosystem. We engage companies, issuers, we also engage investors. So we are that central platform where people come to risk manage, to raise capital. And at the heart of it, it is an ecosystem. And so what do we provide? So first is that we provide data. We want investors to have that data to be able to access, to understand what companies are doing. So we have been talking about having a way of reporting following certain international guidelines. We provide that capacity building. We have talked about a data platform with certain metrics so that people can look and compare across time and across sectors and companies. That's one. Second, in terms of products, we have been launching also a series of products that have an ESG tilt to it. So what do we mean? For example, these are the FTSE Blossom Index. Those are tracked off Japan, but they have a higher weightage on the ESG factors. So investors can express a view. And through our scientific beta, you mentioned as one of our subsidiaries that we have acquired, invested over the last 2 years, they provide a very pure climate-based index, what we call the Climate Impact Consistent Index. And actually that takes away some of the financial considerations, but weights very heavily or entirely on climate factors. And in fact, pleased to be able to say that Scientific Beta won the Best Specialist ESG index provider at the ESG Investing Awards 2022. That's recognition of the product that they have come up with. So we have talked about products, we've talked about data, but again, as part of the ecosystem and as how Singapore is connected to the world, we have to be part of the global discussions on this. No man, no company, and no country can do this alone. And so we have been very active on the global front. So we are one of the founding members of the Glasgow Financial Alliance for Net Zero. We have been involved in many other international committees and advisory task force. And so these are important efforts that we participate. We represent the voice of certain groups of market participants and make sure that the needs of this region are also articulated, and that when we talk about solutions that meet the needs of the ecosystem, they are articulated and explained very well. And I think some of these things will relate to transition finance. It's not just about pure shades of green, there are also other shades of brown. And we have to be at the discussions to talk about these things.
And looking at, I think some of the figures that Harry Cho had mentioned, I think she'd mentioned that Singapore also has the largest green finance market in ASEAN, accounting for just over 50% of cumulative ASEAN green bond and loan issuance. How do you see sustainability, if we're talking about profits and purpose? How do you see this gaining ground when it comes to SGX's bottom line?
So at the heart of SGX, given that we are a market infrastructure, many of the things that we do or invest takes a while to pay off, right? In terms of drop down to the bottom line. So what we do must necessarily have that longer term perspective. Many of the things that we do don't drop off, don't contribute immediately, but we have to make the investments. So when we talk about some of these investments, for example, the CIX, Market Note, which is another digital asset venture with Temasek that tries to improve the workflow and provide ESG data. Those things are things that we believe fundamentally will have an impact on the sustainability of the company in the future. May not contribute immediately, but we think we are laying bets for the future. And I think no one can disagree about the macro trends and where we think we will need to head. I think for us right now is, while we invest in these efforts, is how do we do this in partnerships? Because we need to bring people along, whether they are the rest of the financial sector, the market participants and companies. How do we as an exchange do it in a collaborative manner that will provide for the sustainable future of the Singapore financial sector, which will include SGX. So I think that I think we have to emphasize about the collaborative approach, contributing our voice, and then investing in products and services and in platforms that will then lead to a more sustainable future for SGX.
We've got a lot to cover. We've covered a lot already, but quickly before I let you go, I know that SGX has got, well, it's SGX Group. You've got 6 brands under the group. What's going to be your key focus in the year ahead?
Multi-asset strategy. We are consistent. It's about execution. Every half year, we of course have to come out and report the progress. But I'll say that we are making good progress, and the 6 brands really show the multi-asset platform nature of our business and the depth that we have built in some of these segments and the depth that we are going to build in the other segments. FX is an example. We started off with exchange traded futures. It grew very well. We are a market leader in this space, but we wanted to provide investors and traders with greater choice. So we went into the OTC FX space, but again, not as separate pools, but building into an integrated marketplace where investors, companies can tap into the deepest liquidity and frankly, lower their cost of being able to access and hedge against some of this FX risk. So to us, this typifies the scale that we are going to build in our platform. I think we have made good progress, but a lot of work still has to be done.
Is there anything else you'd like to share with us today?
I think for us, look into deep into the numbers. I think the headline numbers do tell a certain story, but when you look at some of the underlying drivers of growth, I think those will, give a better reflection of where we think we will be heading. And we really look forward to being able to communicate to our investors and share with them our narrative and our growth story. And hopefully they will be interested and to hear what we have to offer. I'm glad that some of the analysts, I'm looking at couple of upgrades here and there, have seen what we have done. But again, lots of work to be done, including at the cost management part. We want to grow our revenue. We want to maintain our margins or even improve that. And then ultimately, that is best reflected in the share price and where we create shareholder value.
Wonderful. Well, Mr. Ong, thank you so much for taking the time to speak with us today.
Thank you, Rachel.
We've been speaking with Mr. Ng Yao Loong, who is the Chief Financial Officer at SGX. You're listening to Money FM 89.3.
Money FM 89.3.